What's going on, everybody? Brother Richardson here. I'm going to go over the revenue assignment that you guys just turned in and that you will be preparing to do for your unit project. I do want to say that the unit project is a lot of points. It is 100 points in comparison to the around 15 points per assignment you've been getting so far. So let's make sure we get this done correctly so we don't lose a good chunk of proportionate points in this assignment. First slide is I'm going to just introduce you to parts of what's going on here. In a projection sheet that you're seeing here, where it's only one sheet in a model, there are three elements. There's tables, which you'll see an assumption table right here, and a calculating table here. Then you have two models, which are both a unit, a sales and unit model, and a revenue model. And then you have a key. A key is optional. All that does is let the user or the person viewing the model understand the formatting or some of the inputs for the model. So I'm just going to briefly go over these. Tables are a series of inputs and calculations that will be utilized for calculating financial models of projections. Models are a series of calculations based on assumptions on what future projections will be. And keys are references for a third party to utilize when trying to understand the information or formatting presented in an Excel sheet. So that's kind of a brief introduction of what's going on here. So this specific sheet's going to have 4 steps to it. Our first one, we're going to build out the assumption table, which has already been done for us, so we don't need to build the assumption table out. Second, they're going to build however they already have a calculation table, which is referring back to the assumption table. It contains calculations and references. Please note that a majority of your hard inputs are in the assumption table. What that means is after we build these models out, you really shouldn't be going back in and looking and inputting things into the calculation table or into the two models. The third is the unit model. That will contain calculations and references from our calculation and assumption tables. Then we're going to drag these out over the model so that they will do our work for us. They'll calculate for us. And then the revenue model is going to, again, pull from the unit model and from both tables. So again, I'm just going to show you as a visual where all this is. The assumption table, the calculation table, unit model, revenue model. The assumption table. The assumption table is going to be right here in the blue. I have also formatted the input, so I know if I'm looking at this, I know that this is where I go in and hard input numbers. The assumption table is your calculator. This is basically going to be what you're using. Like, imagine it as a calculator and you're punching numbers in. This is where you would punch these numbers in, and then below is going to be if you want to hit that equal sign. It'll contain 95% of your inputs. So notice how everywhere else doesn't really have formatting for inputs. This kind of burnt orange, that's telling us that the only place that we're going to go in and push numbers in is right here. The calculation table is going to be on the right. I don't know why my screenshot didn't have the correct formatting, but this is going to be primarily calculations, either using the inputs over here or just straight references. So if it's a reference table, it's just going to be in orange with 2 orange underlines under it. And if it's a calculation, it's going to be a grayed out box with orange lettering. Now, if it does contain inputs within that calculation, it'll be a grayed out box with black lettering. Again, this would be found in the key. Oh, here's a good example. In the intro, you see what I'm doing here. So the double underline is just a straight reference, meaning it's referencing something in the assumption table. And then the grayed out box with orange lettering means that it's calculating things from other inputs. The unit projection model, a model used in creating tables to calculate a projection. Please do not forget formatting. I can't emphasize this enough. The formatting is going to save you so much time when you have a model breakdown, and it will break down. Every model I've built, master level students have built, professors in the master's program have built, will always break because there are so many moving parts in models. Models are very intricate and delicate things. If you have one wrong button press, it'll break an entire model spanning 8 to 9 sheets. So it's really, really important that we're formatting correctly. Then there are drags, calculations, and references. In a model, you're going to be using first calculations. So you're going to put in that first cell a calculation, and I can show you this. Some of it will be references, and then what happens is we're going to take those first primary cells that we're calculating and we're dragging them out. Do not have inputs within your models. Again, it is so important for transparency and for using that transparency to fix things. When things in your model break down, you don't want to go through 24 months of cells trying to find the wrong input or something of that matter. You want to be able to read everything very clearly. Revenue projection model works very similarly as the units model, except that now in the revenue projection model, we're going to be pulling things from the cells and units model. And then this bottom model, the revenue model, is what is being referenced in your P&L. I'm not going to go over these, but here, if you want to pause the video, here are all of the equations and calculations for every line in this assignment. I will go over it real quick and show you how to do this, but for your sake, this is the equation list. And then on the bottom, I had to explain this real quick. They have an advertising cost. I actually super don't like that they have the advertising cost baked into your revenue. I don't think that's appropriate. I don't think that's very clear and understandable. And advertising cost should be in a different area, whether it's your G&A, whether it's in a marketing and sales department. It really should not be baked in because advertising cost is not a direct cost of goods sold. It's not like, I just don't love it. I don't love how they're doing this, but all the same, these are the two equations to do that. Okay, so that's the end of the slideshow. Let's dive into the model. I'm going to bring this over. You guys are going to see this weird thing. I'm super sorry. Peeling back Okay, so let's go over this. So this is what we have to work with. You're going to see it looks a little different because I've reformatted it in the two assumption table and the calculation table, and I've added a key. Why did I do that? For your sake, for my sake. It just makes more sense when you can glance at a cell and you can say, oh, 2 underlines in orange. That means it's just a direct reference. When I say direct reference, I'll scooch in here. So if I were to click on this cell and look up here, it's just referencing one cell, B11. So it's referencing this 999. There's no other part to it. It's just saying, hey, this number comes from this other table. And then what these grayed out boxes with orange lettering show us is that, hey, it's a calculation, meaning that it's not just one cell that we're referencing, it's actually calculating 2 cells. In this case, it's saying gross profit of ukulele, 5 times the ukuleles per customer, 1, will give us the ukulele's contribution. That's what the formatting is doing here. So let's go ahead and let's get going on this model. So for the first model we're going to do is cells and units. For this assignment, you did not have to touch either table. You don't have to touch your assumptions table, and you do not have to touch your CLV calculation table. Don't touch them, you don't need to. So let's just get working on our cells in units. Actually, I don't want to do that real quick. Go back. All right, so PPC clicked, if you remember, if you look back at the equations, a PPC click is the previous month plus 1 plus the growth rate. Okay, so for the first month, a little tricky. Why? Because what's going to happen is that last part, the growth rate, won't exist. We're just going to reference, I believe, the initial clicks of the month. So it's just going to be a reference. What do we do when we do that? I'm going to go over here and I'm going to say, hey, this cell is just linked. And they're going to make this whole thing green. That's awesome. Let me ungreen this. That's annoying. Help. There we go. This is linked. Okay. So what we're going to do in February is we're going to say equals previous month plus the 1. I believe that should be actually I'm sorry, I might have messed that up. Times 1 plus, let's see, the growth rate, correct? Growth rate a month. wants us to name the cell. I'm not going to do it. Okay. So this is our calculation. What are we going to do? We're going to say this is the calculation. And then what are we going to do? We're just going to draw. Before we do that, good thing I caught, we're going to root it. What root means is I don't want to have this cell drag, so I'm going to press F4. You'll see up here that dollar signs up here before the B and before the 14. That means that the red cell B14, if you come down, B14, will not move when I drag. That's important. Is it going to keep the formatting too? Wonderful. That's what I wanted. Not. Actually, I don't even have to do that. So before we do that, what I'm going to do is just this. I'm just going to drag. I forgot to root. Drag. And then we're just going to... So that is how you do the first part. You drag it, and then I'm going to go back and say, this is the calculation, everything else is a drag. So what you're going to see here is if this were to break, I would say, well, let's make sure this first cell's referenced correctly. It is. Let's make sure this cell is calculated correctly. It is. The other cells you don't have to check. You don't have to check because I'm just dragging them. I'm dragging them through. I can drag these things through the entire model. So really, I should never have to go back and double check any of these cells that I drag. If something's wrong within these, then that means that this cell's wrong. So let's go to the next one. Ukulele cells. That's going to be PPC clicks times the conversion rate. So PPC clicks. Where is it? PPC clicks. Is it up? Oh, it's going to be that cell. PPC clicks times the conversion rate. Conversion rate being here. Don't forget that when we do the conversion rate, we gotta root it. Please root. Did it do it? Oh, that's why they wanted you to name it. So I'll give you a little bit of background. In our programs, we don't have students name cells. Why? Because it's super, super confusing in this instance. So when you name a cell and then you reference it in Excel, it'll never drag with. That's why they're doing it. And then what we're going to do, so this is our calculation. And then we have this, and we're going to just drag it to April. And then make sure you have your decimal points going in the appropriate place. So it should be 2020 to 2020. Perfect. New subscribers. New subscribers is ukulele cells times the sub rate. So let's go equals ukulele cells. Where is that number? Right above. Times the sub rate. So sub rate, where is that guy? Subscriber rate, right here. And then we're just going to press enter. We're going to drag. We're going to fix our decimals, and then we're going to say, hey, this is where the calculation started. So I'm hoping that the formatting is making a little bit of sense to you guys. If it's not formatted at all, that means I just drug it through. End of subscriptions. I think they've already done this, number of subscribers. So what that is going to be, he already did the formula. The reason that they did this function is because it's a little complicated. If you look up here, it's an if function, meaning that if something happens that's predetermined, then what you need to do is have a cell calculate. Basically what this function is saying is C15, number 1, if it is less than the submonths of 18 plus 1, then it is 0. So again, reading this from left to right, C15, the number, so that's the 1, that's the number of months, is greater than the submonths, which is 18 plus 1, so 19, it is 0. If that is not the case, if it is greater than the submonths, then it's going to be C20, C20 being, let's go down, C20, which is referencing itself, -1 minus the submonths. Woof. You know what I mean? So we're just going to leave that alone. I think it looks like it's done for you all the way through. So in the unit, don't worry about this, it looks like. Number of subscribers, simply enough, we're going to go previous month plus any of our new, minus any of the ones ending that we're losing. If this happens to you, all you got to do is go scroll up. Okay, I like to have this be in a different format. This is kind of like the total. This is my final calculation, number of subscribers. I'm going to format this entire row as a total, and then all I'm going to do is I'm going to drag this over. Boom. Okay, hopefully this makes sense so far. We just got done with the cells and unit model. Let's go down to subscriptions. Let's get rid of this ugly green and just make it normal. Subscriptions. Subscriptions are the number of subs. So number of subs, which is right here, times the sub price. Subscription price for subs should be the $9.99 average subscription price right here. And then what we're going to do is just hit enter. I don't believe anything needs to be rooted because the average subscription price is nicknamed. And then we're going to just drag this puppy over. Oop, not that far though. Just to April here. Fix our decimals. And then it is relatively important. I'm not going to like dock you for this, but format it in dollars. We got ukulele sales. Ukulele sales is the ukulele sales in units. So that 20 times the ukulele price. So that should be, where is this? Right here. So B7, and we're going to drag this over, and we're going to go ahead and put dollar signs, and we're going to go total. Again, if it's a total, I like to do a formatting of this sort, and what we're going to do is it's going to just be a sum. What a sum function is just adding them, and we're going to drag. Perfect. So again, this and this are both going to be calculations, and then this and everything over is just going to be, so as you can see what this is basically saying, hey, these are all the calculations, these are all drug, these are my totals. Cost of goods sold, let's figure this out. Cost of goods sold is ukulele sales, which we find here, and we're going to multiply that sucker by the ukulele cost, which is right here. We're going to drag this over, make it dollars, make the first one a calc. Boom. Okay. Then gross profit, again, gross profit is kind of a total, kind of like a bottom line. So I guess what I'm saying is that this right here is like a bottom line. My gross profit is going to be gross profit, I'm having a brain fart, it's just going to be this minus this. Boom, 49. I believe that should be correct. Sales minus cost of goods sold. Yep. Okay, so that's where we should be. Let's make sure that I'll go back and make sure this is correct. Advertising costs, let's go over this. Get rid of that guy. Advertising cost is going to be your equation PPC clicks, which is going to be up here, times the cost per click, which I believe is in our table here. And then we're going to drag it over, make it dollars. And then the gross profit less the advertising cost. I really don't know why they do that. And then we're just going to make that the correct formatting, make this guy the correct format, whoop, not input. And then we're just going to say, hey, this is going to be the gross profit minus this. Whoop. Okay. And then that should be our equation. Okay. Except for one. Let's look at this. Oh, well. Oh my gosh, no. Back all the way out. Okay, that's fine. All right, so that's how we do it. That's how you should have done the assignment. I'm going to just take a brief glance to make sure that this is done correctly. Oh no, I didn't do it correctly. Let's figure this out. 50, 190. So this is going to be good because now we can go and troubleshoot. It looks like my ukulele sales is off. So let's figure out why our uke sales are off. So 20. I'm just going to see what they did here. 20. Oh, see, that's how simple it can be. I referenced the cost, which is not correct for the sales. That should be referencing the 100. And then we're going to just whoop and undo those. Okay, so that should be correct now. Did that actually fix it? Yep, that fixed it. Okay, so I see one misclick and your model's wrong. So this is the correct way. What happened was instead of referencing uke price, I had referenced ukulele sales. So that's how you do it, and then you just drag it all the way down. If you have any questions, please reach out to me.